Welcome to Windfall Edutech Beginners Module. History of Business, Equity Markets. What is BSE, NSE, Sensex, Nifty, EPS, PE, FII, FDI, PAT, EBITDA, ARPU? Don't worry if you see heavy jargons. You will be a master of this by the end of this tutorial. Where to look for our best option in our investing journey. Understand basic financial statements, profit forecast. Most importantly, you will learn how to buy and sell equity. Getting started with the tutorial. To simplify, I had to divide the information into chapters. Just go step by step. You can jump into any chapters you like but advise you to go sequentially. Chapters. Chapter 1 Indian Equity Market Introduction. Chapter 2 Types of Equity Market. Chapter 3 Equity Market Terminologies Demystified. Chapter 4 Investing in Equity Market. What is equity? What is a shareholder? What is a share market? Types of market. Identities of share market. History of exchanges. History of governing body. History of measuring indices. Types of shares, stocks. Bull and the bear market. History of Indian share market. What is equity? Equity is most popularly known as share or stock. Business divides its company based on its value into components called equity, stock, shares. Shares are available for you and me to buy. What is a shareholder? When you buy a share of a company, you become the shareholder, a partial partner in the business. And you get a share certificate, a proof of your partnership. Now that you are a shareholder, the company gives you share of the profits called dividend. Of course, the more shares you buy, the more dividends you will get. In addition to receiving dividends, you also receive information and news regarding the company's plans. Cast vote in their general meeting. Claim your share on leftover balance of the company in case it declares bankrupt. What is a share market? A market or association has set some guidelines. If the company falls into those categories, they can register and get listed. An exchange place or a market where you and me can buy and sell shares from the over 5,000 companies listed. Main purpose of stock exchange is to aid in exchange of securities between buyers and sellers. Types of market. There are two main types of markets. Money market. It is a short-term borrowing and lending money. These markets generally deal in treasury bills, commercial papers, bankers' acceptance, certificates of deposits, etc., which pay off in the short term. The core of the money market consists of banks borrowing. Money market and capital market. Here long-term equities and shares are issued and traded. Capital markets, also known as the share market, are where most of the traffic of trading occurs. Share market is further subdivided into primary market and secondary market. Detailed explanation of primary and secondary market follows in Chapter 2. Identities of share market. The exchanges. There are two primary leading exchanges, markets in India. Bombay Stock Exchange, also known as BSE. National Stock Exchange of India Limited, also known as NSE. Plus 22 regional exchanges, markets all over India. Governing body. Regulatory Authority of Indian Share Market. Securities and Exchange Board of India, also known as SEBI. Measuring indices. The Barometer of Indian Stock Exchange. Sensex, short form of BSE Sensitive Index. Nifty, nickname for Standard & Poor's CRISIL NSE Index. History of Indian Share Market. History of share market, stock market, equity market concept in India dates back to 1875, almost 200-year-old. It is one of the oldest and fastest growing financial markets in the world. It is considered as the best amongst the emerging economies market. Growth of Indian stock market remains slow moving because of the controlled nature of Indian economy lack of awareness. 1990s the Indian economy started to liberalize. Two primary leading exchanges, markets in India, BSE and NSE, accounting for about 80% of the equity volume traded in India. Equal in size in terms of daily traded volume. Average daily turnover has increased from 851 crore rupees in 1997-98 to 1,284 crore rupees in 1998-99 to 2,273 crore rupees in 1999-2000. Key stocks are traded at both exchanges and you and me can buy at any. Both exchanges have a different settlement cycle. You will know soon. This allows you and me to shift our positions for maximum gains. History of BSE. Bombay Stock Exchange. 318 persons took membership in the Native Share and Stock Brokers Association, now called Bombay Stock Exchange. In 1965, BSE got recognition from Government of India (GOI). BSE was the first exchange to receive such recognition from GOI. The oldest exchange in India. BSE Sensex comprises of 30 companies. History of NSE, National Stock Exchange. It was established in November 1992. Officially recognized as a stock exchange in April 1993. The largest stock exchange of India. It has the Standard & Poor's CRISIL Index, Nifty. NSE Nifty comprises of 50 companies. History of the governing body. SEBI, Securities and Exchange Board of India. It started in 1990s as a result of financial turbulences in markets. Reactive to three groups: UMI, company, and market mediators. Function is to carry out due diligence for smooth running of legislation, judicial and executive practices. It has quick and effective decision-making credibility. History of the measuring indices. Sensex, short form of BSE Sensitive Index. Came into existence in 1986. Comprises of 30 stock-sensitive companies. 30 companies from 13 industries form the Sensex, account for around 50% of the market capitalization of BSE. History of the measuring indices. Sensex. Increased over 13 times in 20 years. It is used as a benchmark by various mutual funds. 30 companies from 13 industries form the Sensex, account for around 50% of the market capitalization of BSE, serves more or less on the lines of Dow Jones Industrial Index and S&P 500 indexes in U.S. It is calculated on free float market capitalization method, unlike NSE, which is calculated on weighted average market capitalization method. BSE authorities monitor, reviews and modifies the composition of Sensex in order to reflect the changing market conditions. It provides time series data for fairly long period of time. History of the measuring indices. Nifty, S&P CNX NSE Index. Diversified with 50 stock index accounting for around 22 sectors of Indian economy. S&P CNX Nifty is owned and managed by Index Services and Products Limited, a joint venture between NSE and CRISIL, represents about 60% of the total market capitalization of NSE. Was created on the basis of report of high-powered study group on establishment of new stock exchanges. Base period of Nifty Index is November 3, 1995. Base value for Nifty Index is 1,000. Base capital for Nifty Index is 2.6 trillion. Common stock. It is a regular traded stock with variable dividends. Preferred stock. It is a preferential stock with fixed dividends. Growth stock. Stock that witnesses a continued period of growth, over 1 year, exceeding that of the economy. Income stock. A stock that has large sums of dividend paid in a fixed time interval. Speculative stock. A stock that offer the potential for substantial price appreciation. Cyclical stocks. A stock whose earnings and overall market performance are closely linked to the general state of the economy. Defensive stocks. A stocks tend to hold their own, and even do well, when the economy starts to weaken. Mid-cap stocks. A stock with market values of less than $4 to $5 billion but more than $1 billion. Small cap stocks. A stock that generally have market values of less than $1 billion but can offer above average returns. Large cap stocks. A stock that have market cap of more than $5 billion. Micro cap stocks. A stock which are in the $50 million to $300 million range. Nano cap stock. A stock with market cap below $50 million. Gold stocks. A stock of gold mining companies. Treasury stock. A stock that has been bought back by the company that issued it. Blue chip stock. A stock of huge firms who have long record of profit growth, consistent dividend payout history. Penny stock. Bottom prices, speculative stocks which are considered riskier in nature. Have you ever seen how these animals attack their opponents? Let me remind you. A bull will thrust its horns up into the air. A bear will swipe down. So what does it mean? Actions of these animals are related metaphorically to the movement of a market over a period. Upward movement of market, bull or bullish market. Downward movement of market, bear or bearish market. Do you know who dictates the market to be bullish or bearish? It's you and me. I will show you how. Fear factor makes you lose confidence in the company just because politics encroaches in or there is a national security threat or a calamity. Please tell me, even if it is your last day in this universe, will you stop eating, wearing clothes, living in homes, taking care of your health, traveling and many more such realities? Then you must believe that the companies who are suppliers to your comfort will not cease to exist. Have faith. Moral of the story: be positive to be a bull. Thank you. Revise and get ready for the next